Hey everybody, welcome to Seeking Trades. Today I'm going to go over price action, and if you find any value in this video, please consider subscribing, hitting the bell notification, and giving the video a thumbs up. That's going to help everybody else that's interested in this kind of topic find it, and let's get started. So what is price action? Price action trading means you are making all your trading decisions based on what you see on the trading chart itself. And it's just pure trading and price action. That's all you're going to be going with. And which that means the price movement shown through the candlestick charts or the bars, whichever you prefer to use. So this means that, there are very minimal use of indicators, and that the only exception is that you use one or two of the moving averages to basically help you identify the dynamic or the changing support and resistance levels and trends. Now I'm going to talk about the price action trader. So price action traders look for various trading patterns that are found and created by the movement of price. Then these price patterns that they find will lead them to make decisions based on the context of the pattern that is found in. So you may have heard as certain traders and educators talk about the watch for the candlestick patterns such as inside bars, pin bars, and more complicated price patterns such as like head and shoulders and double, triple bottoms and all those types of price action indicators that you could see on the charts. Well, that's what these guys here would use to make their trading decisions as well. So let's just talk about this next one. You have support line here. It came up, came down, tapped it, and respected it. Bounced, came back up, and I'm not talking about the resistance yet. Came back down, tap, respected it again, and then after these got bought up, and then kind of pulled back down, retested, got bought up again. Bullish hammer. Yep, that's exactly what that is. Came up and then just took off and went back up. So this is more like a range bound trading going on here until it doesn't, and it breaks support here, retests, and then fails again, and then breaks down. Don't just get short immediately, because like here you see wicks that came through it but then came back up and then retraced and regained control. The buyers did, and then it came back up to a resistance level, but it kept this support level. So as this breaks support here, always, in my opinion, wait for a retest. Price rejected on this level. So now that it comes back up and retests, and then you wait for the candle that looks like a bearish candle, and you can make your decision, and then it rolls over. That's how price action traders will trade. Okay, let's talk about trends. So as you look at charts, you're going to see it either going up, down, or sideways, or it might be stuck in some sort of funky all over the place and you don't really know what it's doing. It's called chop. Okay, so upward trend rules. You want to see the price making higher lows or higher highs and higher lows. So as it goes high, comes back and goes high again, you want to draw a little line at that high, and then you want to see it go through that high zone, that little line right there, make another high, pull back, high. And so you can start drawing these lines. So as long as the next high candle is higher than the previous candle, then you're continuing to make higher highs. And then lows. So this low is put in as a base, and then the second low is put in as it pulls back and goes back up. You can put in another low line there. And so as long as this low line is higher than the previous, so higher lows, this low is higher than this low is higher than this low, then you're uptrending. Now downtrending. If you downtrend, you're going to see it run, pull back, run, go through your line here. This is your low, you're going to mark it. This is your high, you're going to mark that, and then and so forth. It goes down, it runs, pulls back, runs, pulls back. But it's going to be going through your line that you keep on putting in on the lows. So that low is going to break that low, come back up, test this resistance area, pull back down. Then you also have sideways action. Sideways action is when you see the action just trading within a certain range. You could basically draw a line right across the top, and then you can draw a line around the bottom of that area, and it just channel trades. It can go out of it a little bit, but if it does start going out of that range, then that's basically going to be just choppy price action, that just indecision, and not much that you can really trade, because you think you got the bottom, and then it'll go kind of lower, but then come back right back up, and just goes all over the place, and it's just a mess. I highly avoid any of those types of charts. Okay, I'd like to go over some support and resistance. So as you can see here, there was a support line here. The action came up, came back down, broke through the support level, kind of sort of tested it, put in this little doji, traded sideways, grinded, came back down, hit a low of the day, grind back up to retest that support to make it resistance. They gained strength again and kind of traded sideways. And when you see that it's kind of hanging out in that resistance area for a long time and doesn't fail, eventually it kind of gains steam and then breaks back out and regains the support. So it comes back up, and then this area here becomes a little bit of a resistance area. Moving forward, it came up, hit it, they didn't like it, little pin bar right here got put in. So you could just keep that in mind, and this is just a 1 minute chart. There's a little more advanced way to look at this, but I'll get into that. Maybe I'll get into that in a minute here. And so then this thing rolls over, comes back down, and then if you go to the 5 minute chart, just take a look at that again. You could kind of see, if you wanted to say this is like a resistance zone, because you come across over here, and this area kind of could have been your resistance area. So you're keeping in mind looking left. It comes back up, retest that area, and then once this inside bar right here gets put in, what you could do is you could draw a rectangle from this area up to the top of this pin bar here. Oh, not pin bar, to this sorry, to this candlestick here. And then what you do is draw this area here as a zone and just wait for it to retest. And this is what price action traders do. So it came up, put in this inside bar. This gave the price action trader the ability to go, okay, well, this looks like a little bit of a resistance zone. Let's just wait and see how it acts. And let's wait for a reversal candle to be able to get short. So it came up because this has a nice strong little run. Comes up, gets pushed back down a little bit, then that's another bearish candle, comes back down. But then you look left, this area right here is maybe a new little support level. So buyers think that's a good spot to get in after 3 little candles get pulled back on the sell-off. They jump in, they buy for a new candle to make a new high here, say. It comes right back into this little support or this resistance zone. It pulls back. All these traders are thinking, okay, this is a bull candle, you know, or it's a bull flag. It's setting up. So they get in. Long. It goes up right to the top of this candle here. It gets shut down, and that's a very bearish sign on this candle. This doji, it's a doji, but it's maybe a pin bar. I mean, the body's not very big, but you can call it either way. it's a bearish candle, and then the next candle, what you could have done here is just as it opened up, is you could have got short right here and then risked to up here. And then as you got short here, your stop would have been just above the zone. So 168.67, let's call it, is where your stop loss would be. Your entry is right here at roughly 168 or 168.28, and then your profit target would have been down here, right here at 167.04. So you would have made well over $1, and it would have been nice. So anyhow, those are the little things on how price action traders will use support and resistance levels, just to get into some kind of example on how it can work.